Hi everyone, it's Jack back with another video. Today I'm going to be talking about Medical Properties Trust, the healthcare REIT that's been really embattled over the last year or so, down 56% in the past 365 days, off its 52-week low of $7, but still massively down, nowhere near its 52-week high. It's paying a 14% dividend yield, which of course raises interest at these low valuations. Had an interesting couple of developments in the last month or so. It's making clear progress to clearing up the problems that it's had, and I want to talk about them and how I'm weighing the risk for this business and whether I think it's a buy, sell or hold for me going forward. Like and subscribe and enjoy the content. Let's get into it. This is just a snapshot of Medical Properties Trust's largest tenants. The number 1 and number 3 have been the real problem children for this business and are a lot of the reason why this company's stock is down so much. Steward Healthcare, which is the largest by far, over 4 times larger than any of the other investments, has some Wall Street Journal articles about it with some allegations that its asset purchases were based on incentives essentially, so overpaying for assets to bump up the incentives. Of course, all of these are just allegedly, and there's a number of counter lawsuits from Steward Healthcare and MPW against this, which are having a little bit of success, I hear. Prospect Medical was easier to imagine is that it was embattled with debt, defaulting on its rental payments. I believe it defaulted in January and February as the most recent reporting period, and MPW has been working with both of these to try and get their problems under control in terms of an assets and liabilities standpoint, and they seem to be doing quite a good job. The problems at Prospect Medical on the face of it seem much more tangible and easy to handle, and that's what Medical Properties Trust have attacked. So this is the biggest news that's happened with this company recently, and it's that they've completed $375 million in new financing from third-party lenders, which they're going to use the proceeds to provide Prospect hospital operations with liquidity and better capitalize its managed care business to provide growth, blah blah blah. The upshot of this is that Prospect will have an asset-backed revolving credit facility of around $250 million. It's been repaid in full, and this means that it is essentially free of debt to all third parties, and any lease obligations or material debt adjust to Medical Properties Trust and this new third-party financing, which allows Medical Properties Trust much greater, say, negotiating sway with Prospect to get it under control. Debt isn't to numerous parties, it's only to MPT and this third party, which they've just agreed with. And as of the first quarter of 2023, Medical Properties Trust now holds significantly more assets related to Prospect, around $1.6 billion. Majority of this is $513 million investment in 6 lease hospitals in California and $457 million investment in MPT's Connecticut real estate. Now this to me says one thing and one thing only. Medical Properties Trust is getting Prospect under control. It's third largest tenant and they're helping them along. And this is what really REITs should do with all the tenants that are extremely reliant on them, is to help them along, to manage their asset well, make sure there's no debt or not excessive debt to outside parties, and enable the rent to be paid to themselves. And they seem to have done this really well and looked out for shareholders really, really well in my opinion. The top of the screen is a Wall Street Journal article from May the 12th saying that MPT, one of the largest hospital landlords, blah blah blah, was downgraded because of its exposure to Steward Healthcare, Prospect Medical Holdings. Steward Healthcare has apparently, as reported by the Wall Street Journal, been looking at hiring advisors for refinancing. Prospect Medical Holdings is already refinancing in conjunction with MPT, which is probably what Steward Healthcare will be doing, I would imagine. This is all good news in my opinion. If Steward Healthcare can refinance their debt sensibly with Medical Properties Trust in tow in a similar arrangement, this should be extremely beneficial to Medical Properties Trust. Of course, that doesn't help the potential improprieties with the lawsuits ongoing with Steward Healthcare and the allegations and the short selling. However, those sometimes never clear up and it normally end up settling, and it's not really as tangible as the problems with debt that they were suffering from. From my point of view, I see this as an absolute positive. When you look at the lease and loan maturity schedule for Medical Properties Trust itself, it's really, really strong. 86% of its loans expire or mature, after 2032. So it's got almost 10 years before the majority of its loans. So it's long-term debt, lower interest rate. Very little of it is expiring in the near future, about just over 6% by 2025. Absolutely debt under control of this business. Now, whatever happens with Steward Healthcare, Medical Properties Trust is probably going to take on a bit more debt. It's a REIT, it kind of deals in debt, so I'm not really concerned about that whatsoever. More news from this business is that it is slowly disposing of its Australian segment, which is around 4% of its total assets and 4.4% of its Q1 2023 revenue. Again, this is not of any concern to me really. It's sold 7 properties out of 11 so far. This is a company that has 444 properties, selling 11 properties and 4% of the total assets seems absolutely fine to me to acquire a bit more focus and focus on its larger markets like the UK and United States, which make up over 80% of its total assets. So this seems like a perfectly sensible thing to do. Recapitalise, pay some debt down, buy different assets. Seems like an absolutely sensible and smart thing to do. Of course, the elephant in the room really that has been weighing on MPW and all REITs, and is probably a lot of the reason why the stock price has dropped down, is interest rates. Higher interest rates make property less attractive because you have to take on debt to buy property in most cases, and REITs deal in this. That's a significant outlay, increased interest rates. But as I mentioned, a lot of his debt is fixed interest rate and long-term maturity, so that's not really of any concern. And while property prices are dropping all over the world in places with higher interest rate environments, that has not so much affected Medical Properties Trust. They still have a large amount of assets, not really changed year over year. The total assets are actually pretty fixed. In terms of real estate value, it dropped around 800 million. That's not that big of a deal on $14 billion of assets. So I'm not over concerned. The net investment in real estate, so it's actually about flat, down slightly around $30 million. $30 million on 15 billion is not something to be concerned about in my opinion, and shows the value of the properties. High quality hospitals and things like that, they're always going to be necessary, and I think that is going to be a long-term tailwind for this business, particularly the managed care for the elderly type facilities. Long-term tailwind with an increase in population age around the world. Now this is clearly a business in flux. That makes it very difficult to value it. Based off price to book value, which is the only one that really matters for me out of this list, it looks very, very attractive. See, in 2021 when the tenants were completely under control, it was trading for around 1.7 times book. Just kind of traded above 1 for most of its existence on the public market. 2022, 0.75 times book. Its current value is around 0.56 times book, which is pretty much an all-time low for this business. Its 5-year average is 1.38. Significant discount to net asset value and significant discount to its own 5-year valuation. For picking up an extreme dividend yield right now, and for most of the risk disappearing in my opinion, I think this is starting to look like a screaming buy. While not increasing its dividend significantly, it's still paying out at really pretty high levels. 29 cents per share in the most recent 2 quarters. So we're looking at, say, does that for the next 2 quarters as it did last year. We're looking at around $1.16 for the year versus an $8.15 stock price. That's a pretty tasty yield if you ask me, nearly 15%. Like any investment, this is a game of risk management in my opinion. Now I wasn't so keen on investing in this business while 2 of its largest tenants were falling to pieces in my opinion. Prospect Medical situation seems to be largely under control. I would imagine Steward Healthcare is going that way. So this is starting to look really attractive to me. The valuation has not caught up whatsoever based on this Prospect Medical news. It's gone up slightly with the rest of the market, but not really enough. It's still down over 50% in the last year, paying an enormous dividend yield right now for the relative safety of this business. Like I said, all of its hospitals are not going to shut down. Most of its tenants are doing quite well. It's got $15 billion of net real estate assets, and those 2 tenants which are problem childs, which I don't think Prospect Medical really is anymore, so let's just go off Steward Health. It's around $3.5 billion. If that disappeared overnight, this should still be a relatively healthy business paying a massive dividend yield. I think it's looking really attractive. And I may start a position depending on what the news comes out recently. If the news comes out that Steward Health goes fine, I'll definitely be starting a position. But I'll let you know if I do buy. That's just my opinion. You let me know yours in the comments down below. I'm not a financial advisor, so you should not take any of this as financial advice. Your own capital is at risk. Of course, you should do your own research and due diligence, or contact a registered financial advisor if you need advice. Let me know what you think in the comments down below about MPW. Like and subscribe if you enjoyed the video. I'll see you again next time.